Hello everyone. Today we will be diving into the world's strongest currency, which is the Kuwaiti dinar. We will be going over the macro and microeconomic fundamentals of Kuwait, the exchange rate regime, major economic, political, and financial events, the anticipated central bank interventions, monetary and fiscal policy decisions, and forecast of the exchange rate in Kuwait. Kuwait is a very small country located in the Middle East with a population of around 44 million people. It is known for its vast oil reserves, which have been the main source of revenue for the country for many years. Kuwait's official currency is the Kuwaiti dinar. The Kuwaiti dinar has been in circulation since 1961, and it is the number one most valuable currency in the world, with an exchange rate of around 3.3 USD per KWD. The Kuwaiti dinar is also one of the most stable currencies, as it is pegged to the US dollar at a fixed rate of 0.29963. USD per KWD. This means that the value of the Kuwaiti dinar is directly linked to the value of the US dollar. The pegging of the Kuwaiti dinar to the US dollar has helped to maintain stability in the country's economy and currency. Macroeconomic stability and growth are deeply intertwined with global oil markets, making its economic cycles somewhat predictable yet vulnerable to volatile oil prices. However, diversification away from oil dependency remains a critical challenge for long-term sustainability, especially in the context of global shifts towards renewable energy sources and climate change initiatives. Kuwait's economic structure is mainly oil-based. This contributes to significant fiscal surpluses when oil prices are high. With a high GDP per capita, Kuwait demonstrates substantial economic strength and a high standard of living, underpinned by a total GDP of 183 billion USD. Inflation averages at 2.6% in 2022. Kuwait maintains stability through the US dollar peg, ensuring low import costs and economic steadiness. The fiscal policy has strong government spending, so funded by oil revenues. It focuses on infrastructure and social services, with a saving strategy that reserves at least 10% of revenue against oil price volatility. For monetary policy, the pegging of the KD to the US dollar enhances monetary stability and attracts foreign investment, contributing to low inflation and financial security. External trade heavily relies on oil exports. Kuwait's trade balance is highly sensitive to oil price fluctuations, which showcases its role in global energy market yet highlights economic vulnerability. The business cycle alignment is where Kuwait's economic fortunes are closely tied to global energy demand, experiencing booms and busts in sync with the global oil market. And lastly, for regional influence, Kuwait is a GCC member, and Kuwait influences and is influenced by regional economic trends, with significant roles in energy policies and economic diversification efforts contributing to GCC stability. Microeconomic fundamentals of Kuwait. For microeconomic fundamentals, starting off with public sector dominance, this has a significant portion of the economy and is controlled by the government, with a large public sector providing employment and various services. This includes sectors such as healthcare, education, and utilities. For private sector and SMEs, while the private sector exists, its role is relatively small, but is growing and emphasizes on developing small and medium-sized enterprises to diversify the economy and reduce oil dependency. For investment in infrastructure, Kuwait invests heavily in infrastructure products, including transportation, housing, and utilities, to support economic growth and improve living standards. Foreign investment policies, the government has been working on improving the regulatory framework to attract foreign investment, including laws that allow 100% foreign ownership in certain sectors, subsidies, and social welfare. Kuwait provides substantial subsidies for water, electricity, and fuel, as well as social welfare programs for its citizens financed by oil revenues. For labor market dynamics, the labor market is characterized by a high dependence on expatriate labor, especially the private sector, while nationals are predominantly employed in the public sector. Kuwait's central bank manages monetary policy, which aims to ensure price stability and a strong currency. Kuwait exports petrochemical products, fertilizers, and financial services. Kuwait is also trying to diversify economically through the development of finance, technology, renewable energy, and tourism sectors. Kuwait's exchange rate regime. Kuwait operates under a fixed exchange rate regime. The Kuwaiti dinar is pegged to a basket of currencies, predominantly the US dollar. This means that the value of the Kuwaiti dinar is fixed at a particular rate against the basket of currencies, and the Central Bank of Kuwait intervenes in the foreign exchange market to maintain this peg. This fixed exchange rate regime provides stability and predictability for businesses and investors in Kuwait's economy. Major economic, political, and financial events. Has been making efforts to diversify its economy away from reliance on oil reserves. This includes investment in sectors such as finance, tourism, and logistics. Initiatives like the Kuwait Vision 2035 aim to transform the country into a financial and commercial hub in the region. Kuwait has a vibrant parliamentary system, and elections are held regularly, resulting in significant changes in the composition of the National Assembly. Kuwait has seen ongoing discussions and debates about political reforms aimed to enhance democracy and accountability. Kuwait is a member of the GCC, which is the Gulf Cooperation Council, and developments within the GCC can impact Kuwait's foreign policy and regional alliances. Political developments in neighboring Gulf countries such as Saudi Arabia, Qatar, and the UAE can influence Kuwait's diplomatic relations and regional stability. Kuwait continues to attract foreign investment, particularly in its financial and real estate sectors. The government has been implementing reforms to improve the business environment and attract more foreign capital. Anticipated central bank interventions. Kuwait has historically pegged its currency to a basket of major currencies, mainly the US dollar, as part of its exchange rate regime. The CBK, which is the Central Bank of Kuwait, is likely to intervene in the foreign exchange market to uphold this peg, making sure that the Kuwaiti dinar remains within specified band against the basket of currencies. Direct interventions involved buying or selling its own currency in the foreign exchange market, while indirect interventions could include adjustments to interest rates to influence the demand of the Kuwaiti dinar. The CBK is likely to closely monitor domestic economic indicators, including inflation, trade balances, and foreign exchange reserves, to make informed decisions regarding interventions in times of economic stress or external imbalances. The central bank may implement monetary policy measures to stabilize the Kuwaiti dinar. Monetary and fiscal policy decisions taken or pending. The fiscal policy decisions are currently going through significant considerations, as outlined in the draft fiscal year of 2023-2024. The proposed budget reflects a strategic fiscal expansion aimed at addressing the negative non-oil output gap. It encompasses various measures, including cash allowances for unused leave during COVID-19. The budget, yet to receive parliamentary approval, emphasizes recurring expenditures such as wages, compensations, goods, and services, while anticipating a decline in capital expenditure due to delays in project execution. In addition, the International Monetary Fund, aka the IMF, recommends growth-friendly fiscal consolidation, proposing the introduction of a value-added tax, which is also known as VAT, on specific goods, and the gradual phasing out of energy subsidies. These decisions aim to strengthen fiscal sustainability, rebuild buffers, and address long-term economic challenges. Monetary policy decisions have been guided by the maintenance of an exchange rate peg to an undisclosed basket of currencies. This peg, considered an appropriate nominal anchor for monetary policy, has historically delivered low and stable inflation, allowing the CBK some autonomy in conducting monetary policy. The latest analysis suggests that the CBK should continue to uphold its independence and often review the exchange rate peg to ensure its appropriateness. Additionally, the IMF recommends continuous efforts to strengthen the monetary transmission mechanism, which includes measures such as deepening money and capital markets. These steps lay the groundwork for potential future adjustments in monetary policy. Forecast of the exchange rate. Line graph from the Federal Reserve Economic Data Site is tracking the value of national currency in the Kuwaiti dinar per US dollar over time. It fluctuates over time, showing the changes in the exchange rate from around 1973 to 2015 and the later years. There are several peaks and ups and downs, which could indicate periods of strengthening and weakening of the Kuwaiti currency against the US dollar. A peak signifies a stronger Kuwaiti currency, meaning fewer units of the national currency are needed to purchase $1. The exchange rate seems to have more pronounced fluctuations around the periods marked by the US recessions, such as the early years of the 1980s or the early 1990s. There are noticeable upward trends in the value of the Kuwaiti currency against the US dollar, indicating an appreciation of the currency. Given that Kuwait's economy is heavily reliant on oil, fluctuations in oil prices can also have significant impact on its currency value. And to quickly conclude, the Kuwaiti dinar emerges as a cornerstone of Kuwait's economic stability, firmly pegged to the US dollar and contributing to low inflation and financial security. The fixed exchange rate regime implemented by the Central Bank of Kuwait provides a sense of stability and predictability for businesses and investors in the country. The CBK's proactive approach to interventions, closely monitoring economic indicators and potentially engaging in direct or indirect measures, highlights a commitment to maintaining the currency peg as Kuwait navigates economic challenges, including the ongoing efforts to diversify away from oil dependency. The resilience and strategic management of the Kuwaiti dinar remain pivotal for the nation's overall economic health. Thank you all for listening, and I hope you enjoyed our presentation.